Yes, we said assurance engagement. This is categorized into two. Assurance engagement is categorized into two. Number one, we say we have the assurance engagement. We have the assurance engagement. And number two, we have non-assurance engagement. Now, when we talk of assurance engagement, this refers to the process of examination of the subject matter in order to confirm whether this subject matter conforms to a set criteria, in order to increase the degree of confidence of the intended users of this subject matter by giving either reasonable assurance or limited assurance. So meaning, the main reason why you want to do an assurance engagement is just to examine the books of account, the financial statement, and the data control system with the intention to try to confirm those subject matter, they conform to the set criteria in order to confirm. If yes, they confirm that, then it means you will increase the degree of confidence of the intended users of that subject matter by giving either reasonable assurance or limited assurance. Now, when you talk of reasonable assurance, this refers to a positive form of assurance or a high level form of assurance that an auditor gives after he has audited historical financial information. Meaning, reasonable assurance, this is a positive form of assurance or a high level form of assurance that an auditor gives after he has audited historical financial information. Now, historical financial information, this refers to any information that is available in the public domain. I hope somebody following. Meaning, historical financial information, this relates to any information of activities that already has taken place. Let's say, for example, you are auditing financial year 2019 or 2020, or maybe you are auditing financial year 2020, 2021, or maybe 2021, 2022. All this information has already taken place and you can confirm. Meaning, if I want to confirm what organization did 2021, 2022, that information is there. It is available. We can confirm that. So meaning, if I go through such information, then I can give a reasonable form of assurance or a high level form of assurance or a positive form of assurance. Now, when you talk of limited assurance, this refers to a negative form of assurance or a low level form of assurance that an auditor gives after he has audited a PFI. PFI refers to prospective financial information. Now, prospective financial information, this refers to any information that is futuristic, meaning this relates to any information that is based on assumptions of activities that has not taken place, but we are assuming they will take place in future. Now, think of your auditing financial year 2023, 2024, or maybe 2024, maybe 2025, or probably 2029, 2030. All this information related to activities that has not taken place, but we are assuming those activities will take place in future. Now, think of this scenario. Someone has given you a forecast. Someone has given you maybe a projection. Or probably you have been given a budget. You have capital budget or maybe expenditure budget. All this information related to activities that has not taken place, but we are assuming those activities will take place in the future. And by the way, Lilian, what's the difference between a forecast and a projection? Mwalimu usianze kuniuliza maswali and it's the first class. I know you're a strong lady. Mesha, talk to me, bro. What's the difference between a forecast and a projection?
Okay, maybe if I may try.
Yes.
A forecast is more of a long-term projection. Okay, no, sorry, a forecast is more of a long-term maybe anticipation of how the stuff, the financial maybe the financial instruments will perform. That's a forecast. Then a projection is more of a long term.
A long term, exact is a long term. Meaning, thank you so much, Mesha. Yes, a forecast. This is a best estimate assumption, meaning it's a short-term assumption, e.g., a 1 year forecast, and a projection. This is hypothetical assumption. Hypothetical assumption, meaning it's a long-term assumption. Meaning the keyword here that we need to note is that both of them, they are assumption. We are assuming that in the next 1 year, our capital budget is going to grow by a margin of maybe 2%. We are just forecasting that in the next 1 year, our profit is going to grow by a margin of maybe 5%. Is a forecast that we are making. Now, it's possible we can tell people that we are anticipating in the next 10 years, our capital base will have grown by a margin of maybe 50%. Currently, we are doing 5.5 million, but we are anticipating the next few years, we'll click maybe something to do with 15 million. We are projecting what will happen in the next 10 years. Now, listen, someone will give you such information in a forecast, someone will give you a projection, someone will give you a budget. All these activities have not taken place, but we are assuming they will take place in future. Listen, someone. As long as you work on this, then as an author, you are supposed to give a limited form of assurance or a negative form of assurance or a low-level form of assurance. Meaning, a limited assurance, this is an assurance that you give after you have obtained prospective financial information. We have said prospective financial information. This relates to information of activities that has not taken place, but we are assuming they will take place in the near future. Now, before we get into details, I want to introduce now elements of assurance engagement. Elements of assurance engagement. I'll be moving a bit faster. Elements of assurance engagement, so that once we are done with this, we can just put something down. Elements of assurance engagement. I hope, Lillian, you are following. Elements of assurance engagement. Elements of assurance engagement. Now, we have 5 elements of assurance engagement. We have 5 elements of assurance engagement, and of course, I'll be giving you an acronym to remember. That is CREST. 5 elements of assurance engagement, that is CREST. This will help you to remember. This stands for criteria. We have report. We have evidence. We have subject matter. And of course, we have a 3-party relationship, which entails the practitioner. We have the responsible party. And of course, we have the intended user. Now, somebody follow. When you talk of criteria, this refers to the benchmarks, that we expect the financial statement should conform to them. Remember what we were saying, that an assurance engagement is a process of examination of subject matter with intention trying to confirm whether this subject matter conforms to a certain criteria, meaning a criteria is a benchmark that we expect the financial statement should conform to them. E.g., assuming you are on, say, financial statement. Now, when you're working on financial statement, you are interested on the assertions. Now, you want to confirm when the management we are preparing this financial statement, they conform to IFRS. We have, of course, international accounting standards that they are supposed to comply to. We have concepts. All of these are the benchmarks that we expect the financial statement should conform to them. So when somebody is talking about assurance engagement, as part of the measurement, we need to confirm in that engagement, we have a criteria that we expect the financial statement should conform to them. Then number two, we have a report. Now, when talking about a report, this refers to the ultimate product. The ultimate product that we expect the author should come up with. I've gone through the subject matter. I've gathered sufficient appropriate evidence. I have evidence with me. Now, that evidence must be written and must be contained in a given report. Meaning, auditor's report is that report that differentiates any other report from the audit assignment. Then number three, of course, we have evidence. Now, when we talk of evidence, please, I'm moving very fast. Evidence, this refers to the outcome information. We say this is the outcome information that the author gets after he has examined a subject matter. Point note, we must ensure that we have sufficient appropriate evidence. I think I need to do this. So when we talk of evidence, we say we must have sufficient appropriate evidence. Meaning we must have sufficient appropriate evidence. Meaning evidence must be sufficient, evidence must be appropriate. Now, my people, these are the two qualities or the two characteristics of a good evidence. Evidence must be sufficient. Now, sufficiency is about the quantity of information. Appropriateness is about the quality. I hope somebody's following. Now, meaning, how do I tell that I have sufficient evidence? Evidence is sufficient if it can afford to clear the professional doubt that you might have you as an auditor. Meaning, sufficiency is all about making sure that you have enough. Enough in terms of how much do I have that can help me to form a decision or to form an opinion. Now, meaning for us to have sufficient evidence, then it means we need to grow element of professional skepticism that maybe something is not right. The professional skepticism, it is the attitude of questioning mind that something could be wrong. Why is it important? It helps us to increase our sample size, and also it helps us to consider the right technique to use when we are gathering evidence. Meaning, for us to have sufficient evidence, then we need to confirm, can we increase our sample size? And number two, can we consider using the right technique that we're supposed to use for the purpose of gathering evidence? Then from there, of course, we have element of appropriateness of evidence. Now, appropriate evidence, this is all about consideration of the quality of information that we are giving out. Now, for us to have appropriate evidence, then we need to consider two characteristics here, whereby we need to consider the reliability of the source, and of course, the relevance. We have to consider the relevance of the source, meaning I have to consider if I want to have enough evidence for the purpose of forming a decision, I have to consider enough in terms of can it clear the professional doubt, and number two, can I consider appropriately in terms of do I have a quality information that I can base on when I'm forming a decision. Now, evidence will be reliable if at all I consider the reliability of the source. Where am I getting this information from? Is this information that I have, is it from an original document or is it from a photocopy? Now, evidence is reliable if it is obtained from an original document other than a photocopy. Number two, evidence is reliable if it is obtained from an independent source. Now, evidence from within the organization is only reliable if that internal control system of that organization, they are strong. Next, evidence is reliable if it is written evidence, meaning written evidence is more reliable than a photocopy. So, as an auditor, for you to conclude that you have evidence, you need to consider do I have sufficient appropriate evidence for the purpose of forming a decision. Then from there, number four, we said we have a subject matter. Now, subject matter, this refers to the phenomenon. Somebody I want you to follow keenly. From here, we'll be writing something down. Subject matter, this refers to the phenomenon. The phenomenon or the item that is being audited. Item being audited. Now, that is to imply when you are doing audit assignment, you can be auditing our internal control system of this organization. You can be auditing the financial statement of this organization, so books of account. And of course, you could be auditing the processes of the organization. And that's what we say assurance engagement is a process of examination of subject matter. Now, meaning if I'm working on the internal control system, someone follow, here I'm interested on efficiency and effectiveness of internal control system. Number two, I also need to consider, I'm evaluating this internal control system because I want to confirm this internal control system, could they be weak or are they strong? So meaning as an auditor, even before I start auditing, then it's very important for me to consider what about the internal control system. Now, listen sample. When you're working on efficiency and effectiveness of the internal control system, this is whereby you are trying to set your ICEQ, that is internal control evaluation question, yeah, to confirm the effectiveness and efficiency of ICS. Please, somebody don't panic. Already you are taking care of that and be working on this in the right time. Meaning, I just want to paint a picture when we are working on the subject matter, what exactly we are working on. So in an organization, I will evaluate this internal control system because I want to confirm the efficiency and effectiveness. Now, we can only confirm efficiency and effectiveness of internal control system if at all the internal control system are able to meet the objectives of the ICS. And I think at this point, I need to ask a question. Where is Millicent? Millicent, how are you?
Fine.
Thank you to hear from me. Yes, now talk to me, Miriam. No, not Millicent, Millicent. Now, what are the objectives of internal control system? At least you can mention 15, if not 2. It's okay. And please, I want to comment, section 6, I want to place a disclaimer. Mimi huwa nauliza maswali mingi, so at least I want to put a disclaimer so that when I'm asking those questions, utakuwa unakumbuka mwalimu alituambia nauliza maswali more. So, Millicent, do you remember objectives of ICS? There are only 5. Number 1, safeguarding of companies' assets. Number 2, prevention detection of errors and fraud. Number 3, to ensure that the company achieves its objective. Number 4, to ensure the policies of the organization are being adhered to consistently. And number 5, to ensure security and proper documentation of accounting record. Listen, somebody, when you are evaluating the efficiency and effectiveness of ICS, you are trying to confirm the internal controls of this organization I'm auditing. Are they able to achieve the 5 objectives? Meaning, when you are doing an ICEQ, of course, as we continue, I'll teach you how to audit internal control system. There is an odd procedure on how to audit internal control system, whereby you need to understand they exist, you record down, then you walk through the test, you do an evaluation. Now, we have 2 forms of evaluation, whereby number 1, you do an ICEQ, and number 2, you do an ICQ. Now, ICQ, this is whereby you are trying to test the strength or the weaknesses of the internal control system. Now, when you are doing this, when you are doing an ICQ, you are interested on the components of internal control system. Where is Lillian? Lillian, talk to me, mom. Do you remember the components of ICS? You're the intermediate. Mwalimu, you see tumesoma leadership sahi, you're working on LM, and you see MA iko hapo imetukaza. I know you are strong people. Finding yourself this level is not a joke. So I salute you guys. It's possible you might not remember, but I know you worked on this. Now, we have 5 components again of internal control system, whereby we talk of control environment, control activities, entities, risk assessment, processes, information system, and other related business processes and monitoring. Listen, somebody, when you are doing an ICQ, this is whereby you are trying to measure whether this internal control system, they are weak or are they strong. Now, how do you do that? By testing the components. Is there segregation of duties? I want to confirm, is there control environment? What about the awareness that the top management communicate to the junior staff? I'm trying to confirm, is there monitoring that is being done? I'm trying to evaluate possibility of internal control system, strength or weaknesses. So when you are doing that, you are working on ICQ, you're working on an ICS as a subject matter in that respect. Then number two, we have said again, we can also be auditing within an organization. We can be auditing financial statement. We can be auditing the financial statement of this organization, the financial statement, or the books of account. Now listen, measure. When you're working on the financial statement or the books of account, you're working on what we call the assumptions. We said what is assumption last class? Where is measure? You see, I can't afford to see you sleeping. So lazima nikae nikiwashtua. Measure, you're well?
Yeah, sure, well.
Good, bro. Good. Exactly. You must stay on. So, what is an assertion? We say an assertion. This refers to a statement or a representation made by the management when decided to include or to exclude an item in the financial statement. Now, listen, somebody. It is my business as an auditor to evaluate this internal code. To evaluate the financial statement to confirm when the management were preparing the financial statement, did they consider assertions about classes of transaction? Number two, did they consider assertions about account balances? Number three, did they consider presentation and disclosure? Those are the three categories of financial statement assertion. Number one, assertion about classes of transaction. Number two, assertions about account balances. And number three, assertions on presentation and disclosure. Now, this is to be when you are doing your audit assignment, you try to confirm when these people, when they were preparing this financial statement, did they consider existence of these assets? They consider whether those sales that they are capturing in the financial statement actually they occurred. They consider how the financial statement are presented. Meaning, you as a practitioner, as a subject matter, you're working on the financial statement or the books of account to confirm the assertion and possibility of material misstatement in the financial statement. Then from there, of course, we have the three-party relationship. Remember, somebody we are working on elements of assurance engagement. Please, I don't want to lose anybody. We are working on elements of assurance engagement. Number one, we worked on the criteria. Number two, we worked on the reports. Number three, we have worked on the evidence. Number four, we have worked on the subject matter. Now we are working on number five, that the three-party relationship. Now, on the three-party relationship, we have the practitioner, this being you being the professional. We have a responsible party being the management. And of course, we have the intended user. This refers to anybody who has interest on the audited financial statement of that company. And those are the five elements of assurance engagement. So this is what we say. We say assurance engagement is a process of examination of the subject matter. I now understand that now, Lillian, you understand what is a subject matter, with intention of trying to confirm whether this subject matter conforms to what? To the set criteria in order to increase the degree of confidence of the intended users of this subject matter by giving either reasonable assurance or limited form of assurance. Are we together up to that point? Any question? I think at this point we can put something down. Please, not somewhere. Our topic is assurance and non-assurance engagement. That is our topic. Assurance and non-assurance engagement. And by the way, other than Lillian, Millicent, can you confirm? Is this your first time or we met before the previous lesson? I want to make a decision, either we put these notes down, we write them, or I just said later. Millicent, confirm to me.
First time.
This is your first time. Okay, if your first time, then I think it's very important for us to, let's have these notes down. Let's have these notes down. Please have this, the topic. The topic is assurance and non-assurance engagement. Assurance and non-assurance engagement. Assurance and non-assurance engagement. Now, under that, I have subtopic, assurance engagement. Let's up this down. Assurance engagement. Assurance engagement. Assurance engagement. And that note, it is an engagement whereby it is an engagement whereby a practitioner evaluates, comma, examines, or measures the subject matter, and forms a conclusion, to raise the confidence of the intended users, on the subject matter conformity with the criteria. I repeat, can you check on what you've written? It is any engagement whereby the practitioner evaluates, examines, or measures the subject matter and forms a conclusion to raise the confidence of the intended user on the subject matter conformity with the criteria. Full stop. Subtopic, objective of assurance engagement. Objective of assurance engagement. Objective of assurance engagement. Objective of assurance engagement. Under that note, there are two types of assurance engagement a practitioner is permitted to perform. There are two types of assurance engagement a practitioner is permitted to perform. There are two types of assurance engagement a practitioner is permitted to perform, i.e., reasonable assurance engagement, and limited assurance engagement. Reasonable assurance engagement and limited assurance engagement. Full stop. Let's have subtopic. Remember, before you write that subtopic, remember, we have said we have these two. Reasonable assurance or limited assurance. Something I want you to note. Reasonable assurance is a high-level form of assurance. Limited assurance is a low-level form of assurance that you can only give after you are audited a PF5. That is prospective financial information. Subtopic, elements of assurance engagement. Elements of assurance engagement. Elements of assurance engagement. Elements of assurance engagement. And that note, the following elements of assurance engagement, differentiates between assurance engagement and non-assurance engagement. And non-assurance engagement. Number one, three-party relationship. Three-party relationship. Number one, three-party relationship involving practitioner, responsible party, and intended users, Number two, an appropriate subject matter. Number three, suitable criteria. Number four, sufficient appropriate evidence. And number five, a written assurance report. Now, very fast, let's start with number one, three-party relationship. You can have number one, three-party relationship. Under that note, assurance engagement involves three separate parties. I.e. practitioner, responsible party, and the intended users. Now let's start with number one, practitioner. Number A, practitioner. Please make sure that you number your software. We have started with number one. We have said we have three-party relationship. Another three-party relationship, we have number A. Please make sure that this number will work so well to help you during your revision. Practitioner. The term practitioner means a professional in public practice. A professional in public practice, i.e. a professional accountant. Number B, responsible party. Now, responsible party, another note, is the person or persons who semicolon, number one, is responsible for the subject matter. And number B, is responsible for the subject matter information. You can put it into bracket assumptions, and may be responsible for the subject matter. Number C, intended users. And that note, are the persons or class of persons for whom are the persons or class of persons for whom the practitioner prepares the assurance report. Are the persons or class of persons for whom the practitioner prepares the assurance report. The responsible party can be one of the intended users. The responsible party can be one of the intended users, but not the only one. The responsible party may be one of the intended users, but not the only one. Now let's have number 2, subject matter. Subject matter, number 2, subject matter. Subject matter. And that note, the subject matter and the subject matter information, the subject matter and the subject matter information, the subject matter and the subject matter information, the subject matter and the subject matter information of an assurance engagement can take many forms. Of an assurance engagement can take many forms. Of an assurance engagement can take many forms. Number 1, financial performance, stock conditions. Number 1, financial performance, stock condition, e.g. HFI and PFI, e.g. HFI and PFI, for which the subject matter information, may be the recognition, for which the subject matter information may be the recognition, comma, measurement, presentation and disclosure, presentation and the disclosure in the financial statement. I repeat, e.g. HFI and PFI, for which the subject matter information may be the recognition, measurement, presentation, and the disclosure in the financial statement. Basically, my people, we are talking about the financial statement. We are talking about the assertion. We are saying part of the subject matter can be the financial performance of conditions, whereby we are saying that e.g. HFI and PFI. Remember, we have said HFI, this refers to any information that is available in the public domain. PFI, we have said this refers to any information that is based on assumptions of activities that has not taken place, but we are assuming those activities take place in future. Meaning, when you're working on financial performance here, we are interested on the assertions. Remember, I've told you an assertion, this refers to a statement or a representation that management makes when deciding to include or to exclude an item in the financial statement. And I think I've just told you we have 3 categories of financial statement assertion. Number 1, we have said we have assertion about account balances, whereby assertion about account balances here, this whereby before you make a decision confirm, when management were preparing this balance sheet, they confirm existence of these assets, they confirm the rights and obligation, they confirm the valuation and accuracy. They confirm completeness. So me, somebody, when you're working on the balance sheet, because when we talk about assertion about account balance, we are referring to all the items in the financial position or the balance sheet. So these are the items that we need to confirm. When management were preparing the books of account, wakatuwekea debtors worth 5 million. Can we confirm actually we have debtors worth 5 million? Or maybe the organization, they have been doing teaming and learning. So the information that they are giving us as total debtors, actually part of the debtors they paid long time ago. But the management, they are still carrying those account balances as if those people are there and yet they are not there. So when you are coming into audit and auditor, you're confirming existence of those debtors. If it's physical assets, you're confirming those physical assets, are they there? And if yes, they are they in good condition? So when we will be calculating on the valuation accuracy, we'll be working on the accumulated depreciation and the net book value based on the cost of acquisition. So meaning, is my business confirmed? Do they exist? If yes, do they exist? Are they in the name of this client that we are auditing? If it's a liability, is it a liability for the organization that we are auditing? What about those carrying amount? They have given us net book value there, which is running. Can we confirm the correctness of that amount there? Now, completeness, is there a possibility that there are some transactions that should have been captured, but they were omitted? Because from the understanding that we have, because of business risk, there's possibility that the assets of this organization and the income can be overstated, and the liabilities and expenses of this organization can be suppressed. So it's my business as an auditor to confirm, is there possibility that this income or the assets I'm seeing, they have actually exaggerated that because of business risk? And by the way, Lillian, where are you? How are you, Lillian? So Lillian ushalala, sindio? Mesha, can you hear me?
Yeah, sure, I can hear you.
Thank you, thank you. What about Millicent? Millicent, can you hear me?
I can.
Thank you. Talk to me, Miriam. What is business risk? I know you're a strong lady. Push your memory, push your memory. I know you can do this. What is business risk? Lillian, you should be typing there. Kindly type there. Meshach, what is business risk? Now, listen somebody because of time. Business risk, this refers to any event or activity that is likely to take place and affect our business negatively, hence affecting the going concern of the business. Meaning, if there is any element of business risk, we have components of business risk whereby we can have financial risk, we have operational risk, compliance risk, and external risk. Because of those risks that we are stating there, there's possibility that the management might understand that they are not doing so well because of business risk, and they decide to overstate the value of their assets and the value of their revenue so that they can show the users of the report that they are doing fine when actual sense the business is struggling. So it is my business as an auditor to evaluate, to confirm, is there a possibility that some of the information given there as carry amount, they are not correct. So meaning when I'll be working on the financial performance or condition, this is something that I'm working on to confirm. What about assertion about account balance? This is number one. Number two, what about assertion? And please don't write, I'll give you note. What about assertion about classes of transaction? Whereby under class of transaction here, I want to confirm issues of coverage. I want to confirm issues of completeness. I want to confirm issues of measurement. measurement stroke cutoff. I want to confirm issues of classification. So basically what we are saying is that when we are working on financial performance or condition, we are trying to evaluate this assertion under account balance, this assertion under classes of transaction. That was number one, financial performance stroke condition. Let's say something there. Somebody note something. Financial performance stroke condition. We have said i.e., e.g., BFI, HFI and BFI, for which the subject matter information may be the recognition, measurement, presentation, and the disclosure in the financial statement. Let's go to number B. Number two, non-financial performance stroke conditions. Non-financial performance stroke conditions. Non-financial performance stroke conditions, i.e., performance of an entity, i.e., performance of an entity, for which the subject matter information, may be indicators of efficiency and effectiveness. Number next, physical characteristics. Physical characteristics, put an FN, e.g., i.e., capacity of a facility, for which the subject matter information, may be a specific document. Number four, system and processes. Systems and processes, i.e., an entity's internal control systems, or IT system, for which the subject matter information, may be an assertion about effectiveness. Number five, behavior. I.e., corporate governance, compliance with human resource practices, for which the subject matter information, may be a statement of compliance, or a statement of effectiveness. Now let's go to number three. Criteria. We are done with the subject matter. Number three, criteria. These are the benchmarks used to evaluate or measure. The subject matter. These are the benchmarks used to evaluate or measure the subject matter, including where relevant, those for presentation and disclosure. including those for presentation and disclosure. Let's have an NB. Note, characteristics of suitable criteria. Characteristics of suitable criteria. Characteristics of suitable criteria. Number one, relevance. Relevance. Number two, completeness. Completeness. Number three, reliability. Reliability. Number four, neutrality. Neutrality. And number five, understandability. Number five, understandability. Let's go to number four. Number four, evidence. 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 And that note, the practitioner plans and performs an assurance engagement. The practitioner plans and performs an assurance engagement with an attitude of professional skepticism. With an attitude of professional skepticism. The practitioner plans and performs an assurance engagement with an attitude of professional skepticism to obtain sufficient appropriate evidence. To obtain sufficient appropriate evidence. To obtain sufficient appropriate evidence about whether the subject matter information. About whether the subject matter information is free from material misstatement. Is free from material misstatement. Is free from material misstatement. Next point. The practitioner considers materiality. The practitioner considers materiality, comma, assurance engagement risk, assurance engagement risk, and the quantity and the quality of available evidence. And the quantity and the quality of the available evidence. And the quality and the quantity of available evidence. Full stop. So, few points that I want us to note there. We have seen when we are working on the subject matter, by the end of the day, we want to gather sufficient, appropriate evidence. Now, there are many factors that we need to put into consideration in regard to the evidence we are talking about. And of course, we'll have our full topic whereby we will be discussing those characteristics of good evidence, but I feel it's very important to mention this. That when we talk of evidence, we have to consider materiality. Now, materiality, this refers to the significance of an item in the financial statement. An item is material if the omission or the inclusion of that item is likely to change the economic decision of the intended user. Meaning, I need to confirm this item I'm working on. Is it material or immaterial? And if it is material, can it change the economic decision? Number two, I also want to factor in issues of engagement risk. Engagement risk, this is possibility or the susceptibility that an author is like to express inappropriate opinion based on the evidence that they have gathered. Meaning, if you don't gather sufficient appropriate evidence, if you don't consider materiality, then chances are there is possibility of engagement risk. And that's why now we have to grow element of professional skepticism that something is likely to be wrong. Professional skepticism, it is the attitude of questioning mind that something is likely to be wrong. Why is it important? It helps us to increase our sample size and consider the own techniques that we are likely to use when we are gathering evidence. Let's have this note. NB, professional skepticism. NB, professional skepticism. Professional skepticism. Another note, it is the attitude of questioning mind. It is the attitude of questioning mind. It is the attitude of questioning mind that requires the practitioner to conclude. That requires the practitioner to conclude. It is the attitude of questioning mind that requires the practitioner to conclude that the subject matter information may be materially misstated. The subject matter information may be materially misstated in the circumstances. May be materially misstated in the circumstances. Next point. The attitude allows the practitioner to conduct. The attitude allows the practitioner to conduct a critical assessment. The attitude allows the practitioner to conduct a critical assessment and gather sufficient evidence to form a conclusion. And gather sufficient evidence to form a conclusion. Gather sufficient appropriate evidence to form conclusion. Next point. It is important because it is important because it is important because it reduces the risk of overlooking suspicious circumstances. It is important because it reduces the risk of overlooking suspicious circumstances or overgeneralization when drawing conclusion from observation and faulty assumptions. From observation and faulty assumptions. Not two, another not two, assurance engagement risk. Assurance engagement risk. Assurance engagement risk. That not is the risk that the practitioner expresses an inappropriate conclusion. It is the risk that the practitioner expresses an inappropriate conclusion. Is the risk that the practitioner expresses an inappropriate conclusion when the subject matter information is materially misstated. When the subject matter information is materially misstated. Let's go to number 5. Number 5, assurance report. Number 5, assurance report. Number 5, assurance report. Assurance report, and that note, the practitioner provides a written report. The practitioner provides a written report. The practitioner provides a written report containing a conclusion. The practitioner provides a written report containing a conclusion that conveys the assurance obtained. The practitioner provides a written report containing a conclusion that conveys the assurance obtained about subject matter information. About subject matter information. About subject matter information. Stop. Subtopic: reasons why auditors give reasonable assurance. Reasons why auditors gives reasonable assurance and not absolute assurance. Reasons why auditors give reasonable assurance and not absolute assurance. Number one, the use of selective testing. The use of selective testing. The use of selective testing. Number two, the inherent limitations of internal controls. The inherent limitations of internal controls. The inherent limitations of internal controls. Number three, the fact that much of evidence available to the practitioner. The fact that much of evidence available to the practitioner is persuasive rather than conclusive. Is persuasive rather than conclusive. The fact that much of evidence available to the practitioner is persuasive rather than conclusive. 4, the use of judgment in gathering and evaluating evidence. The use of judgment in gathering and evaluating evidence. The use of judgment in gathering and evaluating evidence. And forming a conclusion based on that evidence. And forming a conclusion based on that evidence. The use of judgment in gathering and evaluating evidence and forming conclusion based on that evidence. And forming conclusion based on that evidence. Full stop. Now let's have subtopic acceptance and continuance. Let's acceptance and continuance. I tend to remember we also worked on this acceptance and continuance. We are done with that part. We are done with elements of assurance engagement. Now we understand assurance engagement. We understand the objective of assurance engagement. We also understand elements of assurance engagement. Now I want us to look to acceptance and continuance. Now, it is one thing for you to audit, and it's another thing or the opinion that you will give as an auditor. So before accepting an engagement, or you continue to audit, it's very important for you to evaluate some circumstances. Is it okay for you to audit this organization? Now think of a scenario whereby you are auditing an organization whereby you have some investment in terms of shares, in form of shares. Or maybe you are auditing an organization whereby you have a close relative in that organization. Now think of a scenario whereby you are auditing an organization and you help them to prepare the financial statement, meaning you are doing a self-review. Meaning, before you accept an engagement, that is acceptance and continuance, acceptance and continuance. Before accepting an engagement, or you continue to accept to audit this organization, it's very important for you to consider, if I accept this engagement, will I be independent? When natural sense, I've invested in that organization. Meaning, if I've invested in this organization, I'm not only an auditor, but also I'm an investor. Meaning chances are there's possibility of conflict of interest. Meaning, if I have conflict of interest, chances are I will not be independent and I will not be able to achieve my objective. The objective of an auditor, that is coming on topic 2, the objective of an auditor is to express an opinion that the books of account reflect true and fair view. But if I have an element of conflict of interest, this arises in a situation whereby you appear to be applying double standard. I'm an investor one way, the other part I'm an auditor. As an investor, I want to protect my investment. I want to get return on my investment. Now, as an auditor, my main objective is to express an opinion. Now, if I am investing, I've invested in this organization and I'm auditing, there's possibility of conflict of interest. Now, conflict of interest leads to self-interest. Meaning, if I'm auditing an organization whereby I have self-interest, now self-interest, we can have financial interest, or we can have non-financial interest. Now, financial interest here, this whereby maybe you have loan with that bank or that organization that you're auditing, or probably you are planning maybe to get an employment in that organization, or probably you've invested in that organization more than maybe 5% shareholding of that company, or probably you're drawing more than 15% of your total earning from this one client. Then it means you have some self-interest. If you have self-interest, then at some point you'll be losing the balance. You'll not be able to understand at what point am I supposed to be independent? At what point am I supposed to be able to audit and express my opinion without bringing the aspect of self-interest in my mind? Now, if I have a relative this organization, the chances are I'm like to be intimidated. Meaning, before accepting an engagement, I have to consider issues of fundamental principles and also consider any possibility of surfing. That is possibility of threats to fundamental principle. Meaning, it's very important for me to consider if I accept this engagement, will I be able to audit? Will I be able to execute my mandate given the challenges that I'm facing there? Other than the factors to consider again, it's very important for you to evaluate the preconditions. Now, preconditions, these are some of the things that we need to agree even before I start auditing the organization. As a precondition, I expect you to understand what is your responsibility as management, and also me as an auditor, I need to understand what is my responsibility. It is my responsibility to receive information and explanation that I feel deemed necessary for the purpose of forming an opinion. It is my responsibility. It is my responsibility to confirm whether the policies of the organization has been adhered to consistently. That is my responsibility. Now, you as management, you have a responsibility to make sure that we have a subject matter. So meaning, before accepting an engagement, I need to understand that precondition is very, very clear. Number 2, as a precondition, again, I need to confirm, is there a criteria that is favorable that I'm supposed to bench on? Because I'm coming in to evaluate the subject matter to confirm its conformity to the set criteria. Is that criteria available? So it's an issue that I need to confirm. So when we talk of acceptance continuous, this is whereby we are trying to evaluate what about legal matters. Now, this is coming topic 4, don't worry. What about professional matters? What about issues of professional practical matters? What about issues related to professional courtesy? Meaning, before accepting an engagement, I need to confirm this company I'm auditing, are they legally registered? The industry where they're operating in, the kind of product that they are dealing with. Do I qualify to audit that organization? Or is there a point whereby I want to engage an expert? It's a factor that I'm going to consider before accepting an engagement. I also need to confirm issues of professional matters. Now, professional matters, I've told you, this whereby you're working on your fundamental principles and evaluating any possibility of threat to fundamental principles. Meaning, I'm talking of professional behavior, I'm working on the integrity, I'm working on competence, due care, confidentiality, objective stock independence, and technical standard. I will not be independent if I'm on an organization whereby I have financial interest or non-financial interest. I will not be able to execute my mandate if I'm doing a self-review. Self-review, this is whereby you are evaluating your own work. You help them to come up with their internal control system. Now you're coming in again to evaluate the same internal control system. You try to help them to come up with the books of account. You prepare the financial statement, meaning you worked on the assumptions that we discussed previously. Now you are coming in again to evaluate the same assumptions. That might not be possible. You're doing a self-review. So before accepting is an issue that I need to put into consideration. Now, I also want to confirm issues of practical matters. Now, practical matters here, this is whereby I'm interested in the issues of resources. Resources in terms of, do we have enough time to lead this organization? We have enough number of staff who are competent enough. And number three, is there any possibility of affiliated party? What happens if you're an organization that is a multinational company? Meaning you have one branch here in Kenya, you have another one maybe somewhere in Uganda, you have another one in South Africa. In your audit firm, you have enough staff who can cover that client. Now, what happens if you have other affiliated parties? They have subsidiaries, maybe they have joint ventures, they have associates. Now, are you supposed to audit those subsidiaries, or are you supposed to engage a component auditor? Listen, somebody, component auditor, this is an auditor who audits those other components, e.g. maybe subsidiary, somebody who audits the associates, somebody who audits the joint venture. The main auditor, you are the main auditor who audits the holding company. Now, that is coming under group audit, so don't worry. So I mean, it's an issue that I need to consider before accepting engagement. Then finally, of course, before accepting engagement, I have to consider professional courtesy. Did we communicate to the previous auditor? If yes, we did, we understand the billing arrangement. We have the working papers. What are some of the risk areas that we need to be aware of? We need to engage an expert based on the technicalities that we have confirmed. Meaning, as an auditor, before accepting an engagement, I need to work on these 4 factors. Then from there, I also need to put into consideration the preconditions. Now, let's put that information down. Now, I can see we have Benedict on board, we have Eric, we have Bai. You guys, you decided to overdo our Sunday business and you forgot that we had a class. It's fine. Yes, we had other ladies who left sometimes back. Imambo yavini ni challenging, but we shall overcome anyway. Acceptance and continuous. Acceptance and continuous, and that not. The engagement partner shall be satisfied that appropriate procedures regarding the acceptance and continuance. Engagement partner shall be satisfied that appropriate procedures regarding the acceptance and continuance of client has been followed. Engagement partner shall be satisfied that appropriate procedures regarding acceptance and continuance have been followed. First up, next point. The practitioner shall accept. The practitioner shall accept or continue an assurance engagement. The practitioner shall accept or continue an assurance engagement only when the practitioner shall accept or continue an assurance engagement only when 1, The practitioner shall consider his independence. The practitioner shall consider his independence. The practitioner shall consider his independence. Number 2, the practitioner shall consider appropriate competence. The practitioner shall consider appropriate competence and capabilities needed. The practitioner shall consider appropriate competence and capabilities needed. 3, the basis upon which the engagement is to be performed. The basis upon which the engagement is to be performed has been agreed. The basis upon which the engagement is to be performed has been agreed. Next, establishing that the preconditions for an assurance engagement are present. Establishing that the preconditions for assurance engagement are present. Next, confirming that there is a common understanding. Confirming that there is a common understanding between the practitioner and the engaging party. Confirming that there is a common understanding between the practitioner and the engaging party. Confirming that there is a common understanding between the practitioner and the engaging party. Full stop. Let's have subtopic, preconditions for assurance engagement. Preconditions for assurance engagement. Preconditions for assurance engagement. Preconditions for assurance engagement. Number one, the roles and responsibilities of the appropriate parties. The roles and responsibilities of the appropriate parties are suitable in the circumstance. The roles and responsibilities of the appropriate parties are suitable in the circumstance. Number 2, the underlying subject matter is appropriate. The underlying subject matter is appropriate. The underlying subject matter is appropriate. Number 3, the criteria to be applied in the preparation. The criteria to be applied in the preparation for the subject matter information are suitable. The criteria to be applied in the preparation of the subject matter information are suitable. Next, the practitioner will have access to the evidence needed. The practitioner will have access to the evidence needed to support the conclusion. The practitioner will have access to the evidence needed to support the conclusion. Next, the practitioner conclusion in the form appropriate. The practitioner's conclusion in the form appropriate will be contained in a written report. The practitioner's conclusion in the form appropriate will be contained in a written report. The last point, The purpose of the engagement exists. The purpose of the engagement exists. The purpose of engagement exists. Now, let's have a subtopic: work performed by practitioners, work performed by a practitioner's expert. Subtopic: work performed by practitioners expert. Now, I want to confirm something, that we are preparing ourselves to become auditors. And now the fact that you are an auditor, you are not jack of all trades. You might not know everything. In your practice, there are those areas whereby you need to engage an expert. There's an environment whereby you need somebody who has knowledge and know-how on how to deal with such matters. There are some areas whereby you want interpretation of some statute. You are not a lawyer, you are an auditor. You might require maybe a surveyor at some point. You want a valuer. Now we want to see what are some of the factors that you need to consider before you see work of an expert. So I have somewhere work performed by a practitioner's expert. Then you note this. When the work of practitioner's expert is to be used, when the work of a practitioner's expert is to be used, the practitioner shall, when the work of a practitioner's expert is to be used, the practitioner shall, number one, evaluate whether the expert has the necessary competence and capabilities. Evaluate whether the expert has the necessary competence and capabilities. Evaluate whether the expert has the necessary competence and capabilities. Number two, obtain a sufficient understanding. Obtain a sufficient understanding of the field of the expert. Obtain a sufficient understanding of the field of the expert. Number three, agree with experts. Agree with expert on the nature. Agree with expert on the nature, scope, and objective of the expert's work. And objective of the expert's work. Agree with the expert on the nature, scope, and objective of expert's work. Next, evaluate the adequacy of the expert's work. Evaluate the adequacy of the expert's work for the practitioner's purpose. Evaluate the adequacy of the expert's work for the practitioner's purpose. Full stop. Now, that's the end of that part. That's the end of assurance engagement. Quickly, just see what we have just done. We have said assurance engagement is categorized into two, whereby we have said we have the assurance engagement itself. Then we have said we have non-assurance engagement. Now listen, somebody. This is what we have just worked on. Now we want to see what about non-assurance engagement. So just have subtopic somewhere. Subtopic non-assurance engagement. Non-assurance engagement. Non-assurance engagement. Now, when you talk of non-assurance engagement, this refers to any other form of engagement outside assurance engagement. I repeat, non-assurance engagement, this refers to any other form of engagement outside assurance engagement. E.g., if you are doing tax consultation, I'm trying to help you on how to avoid tax. that does not require me to express any form of assurance. My business is just to show you how can you do this. If I advise you to do more of your voluntary contribution towards your retirement, I'm trying to help you to see how you can avoid more tax being taken to the tax man. If I'm trying to encourage you to have maybe to buy insurance cover, I'm trying to help you to see how much you are going to reduce the element that is going as taxation by just taking some insurance cover there. I'm trying to help you to manage that. If you're working on management consultation, now management consultation here, this is where I'm trying to help you on decision-making process. I'm trying to advise you on the issues of management. I'm doing an non-assurance engagement, no any form of assurance that is expected from me. Number next, it's possible you can be doing compilation engagement. Now, compilation engagement, this is whereby you are helping the management to prepare the financial statement. Now, when you are preparing the financial statement, you're just putting those figures either as an income statement item or a balance sheet item. Meaning, when you're preparing the financial statement, you don't require any form of assurance to be given, just is to put those figures where they belong. Something you need to note, when you're doing compilation with engagement, you are not supposed to confirm the accuracy of this transaction that you are putting into the balance sheet or income statement. Your business is just to classify them the way they are supposed to be. Now, issues of correctness and disclosures, now that is another business. You're doing compilation engagement anyway. Number next, you can do agreed upon procedures. Agreed upon procedures. Now, agreed upon procedures, this is whereby the client and another third party, a client and another third party, meaning you as a client can engage another third party, e.g., a debtor, or maybe a creditor. You can enter into agreement, you can end up into maybe contractual relationship, and you two parties, you can decide to engage the practitioner. You can decide to engage a practitioner to work on the factual finding. Meaning, agreed upon procedure, this is whereby this person and this person will engage the practitioner to work on the factual finding. Meaning, when you're working on the factual finding, you are trying to confirm the agreement that was there between the two parties. Are they still working on this agreement or they have violated? Meaning, at this point, yours is just to work on the factual finding, nothing else is expected of you. Or you can do a review. Now, when you're doing review here, you can do due diligence review, you can do a PM5 review, you can do maybe due diligence review, you can do a PM5 review. Due diligence review, this whereby you're trying to confirm whether these people, when they were entering this agreement, they take that caution or that care that is expected of them before they enter into any form of contract. I think that should be DEC 2017, whereby the examiner was asking what's the difference between financial statement audit and due diligence review. That, of course, we'll be able to see that during our engagement. Or maybe you can do a PFI review. PFI review is whereby someone has given you maybe a forecast or a projection, and you're supposed to confirm those assumptions. Though the evidence is futuristic, but somebody expects to confirm whether that disclosure was done correctly. Now, when you are doing all this review, you're not supposed to give any form of assurance. So when we talk of non-assurance engagement, this refers to any form of engagement that you can do outside assurance engagement. Now, that is what is remaining for us to finish this topic. And I feel, I don't know how quick we can do this. It requires like 15 minutes, and I can see we have like 10 minutes. I think with this, we might not be able to finish. Now, okay, just as subtopic, non-assurance engagement. Non-assurance engagement. Non-assurance engagement. These are engagement that falls outside assurance engagement. These are assurance engagement that falls outside assurance engagement. These are assurance that falls outside assurance engagement. This may include number one, agreed upon procedures engagement. Agreed upon procedures engagement. Number two, compilation engagement. Compilation engagement. Number three, review of prospective financial information. Review of prospective financial information. Due diligence review. Due diligence review. Due diligence review. etc. etc. Now, very fast, let's work on this. Distinction between a review engagement and audit of financial statement. Distinction between a review engagement. Distinction between a review engagement and an audit of financial statement. Number one, a review engagement provides limited assurance. A review engagement provides a limited assurance. A review engagement provides a limited assurance, while an audit provides reasonableness. While an audit provides reasonableness. A review engagement provides limited assurance engagement, provides a limited assurance, while an audit provides reasonableness. Number two, engagement risk in a review engagement is higher. Engagement risk in a review engagement is higher than in an audit. Than in an audit. Next, in a review engagement, the set of procedures performed are limited. In a review engagement, the set of procedures performed are limited compared to those in an audit. Compared to those in an audit. Next, in a review engagement, the practitioner's opinion is expressed in a negative form. In a review engagement, the practitioner's opinion is expressed in a negative form. While in an audit, the opinion is expressed in a positive form. The opinion is expressed in a positive form. Then the last point, a review of financial information is voluntary. A review of financial information is voluntary, while an audit is statutory requirement. While an audit is statutory requirement. Full stop. And that's the end of that part. And apparently it is also the end of that topic. I think I've tried to do my level best to make sure that at least we get everything right. So for today, we will stop there. In our next class, I'll be introducing the next topic. So it's my prayer that at least you'll keep time. Yes, when you come a bit late, I know, trying to configure where we are it might be a bit challenging, especially you're at your place, you have just logged in, people are working on something, you don't know where to pick from. So I'll always urge you, try your level best, just make sure that at least you're in class at the right time, so that at least you avoid any possibility of misunderstanding. So thank you for making time to have this class. Trust me, the class has been successful because of you, Eric, because of you, Emmanuel, and Meshach. Otherwise, if you gentlemen were not there, trust me, we could not say that we have a class. And I've got all the reason to appreciate you and just commend you for your commitment and sacrifice in this respect. So thank you very much. I'm looking forward to meet you in our next engagement that we'll be communicating. I know we're supposed to be meeting on probably, that is on Saturday and Sunday, but in case I get an opportunity in between the week, I can also try to see whether I can engage you. At least we try to do what we are supposed to do early enough. Trust me, section 6 is all about application. Yes, advanced assurance engagement is all about application. It's possible to have those notes, and someone can just give you those notes, like now you have them. But now the key issue is how to interpret those notes into examination environment. So it's very important for us to get it done early enough, so that at least we can have good time to interact on how to interpret those questions. Remember, again, I'm insisting on this. Section 6 is so about application, and we must do proper revision, and that can only be achieved if we finish our syllabus early. So an opportunity that I'll get, we'll take advantage of that so that we can push ourselves early enough and get it right. So for today, we'll stop there. I want to wish you a lovely evening. Looking forward to meet you in our next engagement. Thank you and have a lovely evening.